Hello, everyone. Welcome. So today we are going to basically we're gonna focus on the ECB and on the euro dollar, obviously. So I'm gonna share quickly my screen as well because the announcement it's right now, and we can see now our calendars. Let me just double check. Here we go. The ECB has just announced that is holding the rates on hold. So keeping rates unchanged. The deposit facility rate is 2%. The ECB operational rate 2.15%. So ECB, as it was mainly widely expected, basically kept rates unchanged this week. So this is something that it was widely expected, and we can see this is what I'm showing right now, and I'm not sure whether you can see it. Let me take a bit minimize a bit my MT5, sorry, my bad. So in order for you to see what exactly I'm sharing, this is euro dollar, okay guys, euro dollar in a 15 minutes chart. Okay, now I think it's way clearer. Okay, perfect, much better. Okay, euro dollar 15 minutes chart. We have seen that ahead of the announcement. It tried to gain some ground. That's a 15 minutes chart I'm repeating. Okay, so nothing really significant in the overall outlook. It was something that was anyway widely expected. I mean, holding rates unchanged. The thing, as usual, has been the case lately, is the tone. Ms. Lagarde's tone later on. This is what really matters, and this is what it could change, let's say, the sentiment. So euro dollar pretty steady for the time being, supported 117 117.50, yeah, just rebounded slightly from 117.45. But what I would like to share is something that I had is the daily chart, because this is for anyone that is following us and you regularly attend our live streamings. It's a channel that I have set last time, right? Actually, a while ago. And we have seen that since last week, okay, we are seeing the asset, the euro dollar, recovering and doing a bit of an attempt to get back into the channel, into this multi-month channel. Basically, it's a channel that has been has been held for 1, 2, 3, 4, 5, 6, 5, actually 5 months in a row. So the asset rejected it, extended below it for actually beginning of July, but currently is attempting to return back into it. What that means, okay, obviously a rally in euro dollar is still on because we have, as you already know, ECB acted way more aggressive than the Fed. The Fed is still on hold and is expected to remain on hold until October, November. So there was a bit of a postpone further for the rate cuts. So it seems that this could support for a while, for a few more weeks, let's say, the euro dollar, even though as soon as we see the Fed cutting rates, not only implemented but actually gaining more ground, we are getting this scenario to be more solid, let's say, and we have clarity on when the Fed will cut rates, then we could easily see euro dollar reversing. But for the time being, okay, it's in a 4 days in a row. For the 4 days in a row, as you can see over here on the upside, hasn't really entered the channel yet, the 5 months channel. So I'm highlighting this technical stuff because I want you to keep an eye on it, because this could be the bottom of the channel could proven a key resistance level. Okay, so that doesn't necessarily mean that it will manage to enter the market, to enter the channel. It does not necessarily mean that we have the bullish bias will continue. Look at also the momentum. So we are getting some lower highs on MACD. Okay, so this looks to be a short-lived support for euro dollar. But I remind you, this is a daily chart, food for thought for tomorrow and for next week as well. So let's zoom in, okay, into the 15 or 30 minutes chart just to see what happens. And actually, as I said, ahead of the ECB euro, basically euro dollar was quite supported, I mean, quite nicely above 117.50 level. So the announcement didn't really shock the market as expected. The attention is on Ms. Lagarde later on. Okay, so let me just in general, guys, have in mind that what monopolizes, let's say, and dominates the market so far this week, it's all about the trade headlines. I'm sure that you are all aware of what has been announced yesterday. I'm referring to the deal between US and Japan, in which we have seen Nikkei having a more than 4% rally yesterday. So once again, we are seeing that the trade headlines monopolize the interest and dominate, let's say, the markets this week. So all this euphoria, optimism that we are seeing after the US and Japan trade deal is something that could basically, it provides a sense of optimism on the US-EU trade deal as well. So, and that might be why that might be the reason for a bit of a, let's say, not sideways, but not significant volatility on euro dollar so far today. So there is a sense of optimism that we're going to have a deal earlier than what was expected, and that is actually what has been what has supported also the European indices and European markets in general so far this week. Okay, and so far today. So it's not only about euro, but also the European equities that have been well supported. Also, on the aftermath of a really solid, strong Wall Street session with S&P 500 and Dow at record highs once again. So it's all about the sentiment, guys. It's all about the sentiment. So let me just let's do a bit of a technicals on euro dollar. I will come back to you with to see your questions. Okay, just since we are covering euro dollar, I would like to focus a bit on the technicals as well. Obviously, have in mind, okay, before we move on with the technicals, have in mind that we are expecting to see from Ms. Lagarde a more, let's say, a dovish tone, okay? So what's currently the case is that let's say they had a series of cuts, right? ECB had a series of rate cuts so far this year. I mean, since last year, actually, they started since last year. So that's why the monetary policy right now it's at a more neutral levels. Okay, I'm not gonna say that there is a stability in the economy, but there is a bit of a balance, let's say, or a control. The situation is under control, if I can say that. But nonetheless, but they so far they have acted right. They have proceeded to a series of rate cuts, and they have basically, as I said, left the monetary policy settings broadly at neutral levels. Okay, so Ms. Lagarde is expected today to, let's say, leave to leave, let's say, to keep all options on the table for September. Okay, I mean, to be a bit not neutral, but to keep to have this to state that yes, we have held rates unchanged, but we're gonna closely monitor the data, and if we need to act further, we're gonna do it. So he was expected is that she will keep all the scenarios on the table. However, my dear friends, as you know, other than Ms. Lagarde, we have a lot of ECB members chatting, commenting into social media, into TV shows and in interviews and etc. And we have seen that there are some members, let's say, that they feel that the whole situation, they have stated that the whole situation is very fragile and that they need to they are pushing for a commitment from Ms. Lagarde and ECB to proceed with further easing of the monetary policy. That's Mr. Actually Leveroy, who is actually pushing and stressing the need to remain flexible. Sorry, the ECB to remain flexible, but let's wait and see. Nonetheless, regarding euro dollar, okay, we still have the bar for rate cut higher than usual, but the rate cut, the next rate cut will be, let's say, could be implemented if and only if we have further trade tension and unsolved. Let's say, if the US and EU, let's say, don't proceed with an agreement, with the trade agreement, then the trade tension and the lack of a deal between US and Europe, but also if the euro dollar if the euro more precisely doesn't correct further, this is something that could increase the odds of ECB delivering another rate cut later this year. Why? Because euro dollar, okay, it's overvalued. The euro, sorry, not euro dollar, euro, it's overvalued. So if I let me just show you the weekly chart as well, so you can have a clue where we are standing currently. So currently, this is the weekly chart, okay? We are back to 2021 highs, okay? 2021 highs. So the bar for a rate cut may be higher now, but unless the euro corrects further and unless trade tensions are being resolved favorably, the chances are that the ECB will deliver at least one more rate cut later this year. Have this in mind for the near future. Okay, in August, you know that there is a bit of the banks are on holidays. We will not see any change during August, but at least to have this in mind ahead of September, and especially ahead of the 1st of August deadline, because if US and Europe have not hasn't reached to a deal by August 1st, then that means that we won't have a deal and the tariffs will be implemented, will take place, will be live, and this could change the odds for ECB delivering at least one more rate cut this year. So now, guys, let's zoom in into the, sorry, let's jump. Can see some questions. Okay, just give me a second. Give me a second. Okay, so 30 minutes. I see that you're asking about Bitcoin. I'm on it. Okay, I'm on it. Just very, very briefly. This is 30 minutes chart for euro dollar. Okay, we have, I'm not gonna say a new channel, but at least a nice support level, a nice, let's say, trend line, a nice trend line supporting the euro dollar in a 30 minutes chart. Momentum is turning negative, as you can see. Stochastic over here had an attempt to break the 50 level, didn't manage, it fell, and is now turning lower. So we have a bearish cross, and the latest candle is ready to basically break the trend line and extend lower. So keep an eye on it, because we might see, because basically a confirmed breakout of 117.40 in the next session. So that candle just opened. So we have plenty of time until it's completed. But if it closed below 117.40, this means that it could retest the 117.10 or even 117 territory. Have this in mind. However, if it holds above 117.40, that means that we might see a further consolidation around that level. Okay, so keep an eye on euro dollar for the next few minutes. Now, let's jump into your questions, because I don't want to keep you waiting. Please, my account help. Bible, please contact our support team. There is a live chat on the website, okay, at the bottom right, if I'm not mistaken. It's a live chat with our team here in support team. So please contact them. Everything depends on the press conference, even though I think she will try to keep things calm. Okay, this is what I think. She's not like, this is anyway. The on hold situation, it was widely expected. That's why we haven't seen significant volatility during the announcement. But in general, the majority of the members of the ECB members, other than Villeroy, they are on favor in favor of keeping rates unchanged for now, on a more of a wait and see stance. So if what is expected is that she will be more neutral. She will keep all the scenarios on the table for September, but she will do her best to, let's say, not like point out neither a dovish or a hawkish stance. Okay, so to be a more of a wait and see stance. And if she managed to do that, then probably we're not gonna see any significant volatility on euro dollar. But always press conferences are very highly volatile, so be very careful. Put some support and resistance levels, some alerts if the asset breaks the immediate support and resistance levels ahead of the ECB or during the ECB press conference. Is what I said, guys, that she will try to remain a bit on the wait and see stance. So, but the bar for a rate cut is still really high. We still expect at least one rate cut this year. But if euro corrects further, so if we see euro correcting further, so having a pullback again and moving lower, okay? And if we see also, and if we don't see, if we see an unsolved U.S. trade, I mean, if they don't reach a deal, okay, we might see further rate cuts, not only one. We might see more this year. But this depends also on euro dollar. So yeah, let's wait and see. Again, in this situation, the trade talks remain in focus. I mean, they are dominating even the ECB press conference today. Okay, so let's wait and see. But what's expected is a dovish tone, a dovish hold. So that could, let's say, keep euro dollar a bit on the sideways movement for today at least, and unless if she, which I don't think so, but who knows, let's wait and see. She might do an attempt to correct euro dollar further. So yeah, she might deliberately try to push, let's say, euro to correct further, so that means euro dollar lower. But she needs to be really, really, let's say, aggressive and hawkish for something like that to happen. So keep an eye on the press conference. We have plenty of time until then. I think it's actually, yeah, we have, no, what I'm saying is in 8 minutes from now. So my bad, my bad. It's in 8 minutes from now. We're gonna come back to it in a bit. So anyway, we have done a bit of an intraday analysis. I'm just keeping an eye on the 117.40 level. So let's see your question. Sorry, babbling a lot. I've tried, but I keep forgetting. And then if I put it on, then I forget to change it. And you're seeing, let's say, euro dollar on the bottom, but I'm speaking about gold. This is my what I'm struggling with, basically, with these headlines, with these captions. Yeah, so let's move on. We're doing live analysis, dear, so it's your session. Ask me anything you want. Tell me what you want me to cover. Cryptos, and not only Bitcoin, but also Ripple, Ethereum. I have get a lot of alerts today. They have seen a bit of a decline today, actually significant one. Let's start with, let me change the caption. Let me put Bitcoin, BTC, USD. And okay, now we have Bitcoin on. So here we go. This is the 1 hour chart for Bitcoin. Can you look at BTC or Ripple? Yes, I have Ripple somewhere here as well. Let me be well prepared. This is Ripple as well. Actually, Ripple actually was one of the biggest losers, if I'm not mistaken. Let me check, but not as, I mean, Bitcoin hasn't suffered. It was a bit more of a sideways than in a dip, while Ripple was actually in a decline since yesterday. Yes, exactly. Ripple and Ethereum fall significantly, not solely since yesterday, basically. Bitcoin as well. Okay, here I have, I don't want to confuse you. Here I have Ripple. So here I have Ripple USD. Ripple. I can actually candles 1 hour chart. We can see that basically from 370 territory turned down to below 3 level, 2.94. So we had a bit of a correction, significant correction, especially for repo, my dear friend. Wasn't so much about, the you can see Bitcoin was more of a sideways movement, but Ripple suffered the most. So why was that, and what's next? What is expected? So this is the daily candle in Ripple, by the way. Okay, so in general, the crypto currency market had a really significant decline yesterday and so far today, but mainly yesterday. Okay, today is a bit of a more sideways movement. If I'm not mistaken, this was a crash up to 17%. 17%, if I'm not mistaken, for Ripple. Yeah. So what was going on? Basically, the reason for that, my dear, and I think you already know that, Zibushiso, it's the massive liquidity. Is the massive sell-off that we have seen from institutional players, right? And that's not only for Ripple or Ethereum; it's for all the cryptocurrency, the entire cryptocurrency market, all the digital assets. So I'm not quite sure whether it also is the upcoming August effects. August is a bit low in liquidity and volatility, people going on holidays, so we have a bit of a taking profit situation, especially for institutional players, that they are trying to rearrange their portfolio ahead of September, because, as I said, August is a bit of a dead month. So I'm not quite sure whether it's that only, or whether it has been a coordinated market move, mainly due to some okay, so it is a profit-taking condition. That's for granted. I mean, it's the end. We are nearly in the end of July. August, as I said, it's a bit of a not empty month, but it's the lowest month regarding volumes and liquidity. But yes, other than the profit-taking condition, is also some technical breakouts that we have seen that led to this coordinated market sell-off. Okay, so yeah, that's the first thing, is the institutional liquidations. The other thing is obviously the uncertainty, the microeconomy uncertainty that we're facing. We're just a few days ahead of the 1st of August deadline, the Trump deadline. So this is adding further uncertainty and stress into the economy. That's why it has triggering a bit of a risk of behavior for digital assets, more precisely. And also it's the we have seen also but I'm not sure whether this is affecting the rest of the crypto market, the cryptocurrency market either. It's a lot of has been a lot of massive validator exits from Ethereum's staking system, so that could add it into this sell-off. But it's mainly what I said: profit taking ahead of the August, technical breakouts, so which basically lead to profit taking, and that's why we have seen this risk of behavior. Okay, so the key now is whether this decline will be maintained. If it's not, then that means that we could see a buying the dip condition. Okay, but we need to make sure that this sell-off has run out of steam. Okay, so I'm going to jump into the 1 hour chart. What we have seen over here is that the momentum remains negative. Okay, the asset hasn't really recovered much. It recovered up to 30% of its losses, of the losses that we have seen since yesterday, since yesterday. So not much, not indicative for a recovery yet. This is Ripple, okay? I solely focus on Ripple for now. Momentum intraday is still negative. So yeah, it seems that we still are in a more of a negative outlook intraday for repo. Currently, let me check the 30 minutes chart, DSD position. So you see, it's failing to extend to break this 320 level, the 38.2 Fibonacci level, struggling. We have seen two doji candles, a bit of a more sideways movement here. I know that MACD looks that it has been improved a bit, but that's not the case if I closely check the body of these candles, the flattened moving averages, the pretty flat Bollingers, pretty flat RSI as well. So yeah, that's not helpful at all. For now, it seems that the negative bias prevails, and there is no indication yet for a possible rebound. Okay, so this, for the time being, looks to be a limited, basically, correction. So let's wait and see. I'm gonna jump back to Bitcoin. Okay, so more of there is a lot of steadiness for Bitcoin. This is the daily chart. Let me change my caption. Here we go. Perfect. Daily chart, sideways for 1, 2, 3, 4, 5, 6, 7, 8 days in a row. Flattened moving averages as well. Momentum remains positive, however. Okay, so let me just. Okay, so I ignore that. This is an old pattern. It has this. It's over. Basically, it's done. So yeah, more of a sideways movement. This is what we are seeing right now. Let me zoom into the 4-hour chart. It seems that it's ranging. Yeah, it is ranging, but I'm wondering whether this looks like more of a descending triangle or not. Not necessarily. Yeah, not necessarily. So yeah, there's lack of clarity. There's a position sideways, consolidating around 118,000 territory, MACD at 0, so neutral. I'm gonna jump into the 30 minutes chart. So okay, corrected, rebounded, doji candle, a bit of a bearish one, but parabolics are on the bottom, so we have two contradictory signals over here. Here, the dojiness of this Hawkish candle and the bearish so far 30 minutes candle indicate that we might see a reversal lower. However, the parabolic SAR are far away from the price and below the price, something that suggests bullishness. So mixed signals. So the best that you can do is just put some immediate support and resistance levels, okay? Just to stay alert. Actually, let me just... Yeah, just to stay alert, but very mixed signals. There is no clarity in regarding to the direction. So let's move on. What's the next question? The press conference has already started, and thank you for reminding me. Let me put on the headlines. Usually I have a nice news feed over here that gives me like the key comments from Ms. Lagarde. Let me find it. Like this. Nothing. By the way, it's earnings season, as you already know. We had some significant announcements this week. I mean, Tesla shares decline on a really weak second quarter earnings. Intel as well. Facing a lot of competition and write-downs. So Where is Miss Lagarde? They haven't started yet. Should start. Yeah, here it is. Let me see whether she stated anything significant so far or not. So okay, she's going through her statement. She's going through her statement. So let's wait and see. Let's wait and see. I'm gonna put the live feed over here. Let me jump back into the euro dollar as well, just to keep an eye on it up. Okay, we have another 10 minutes for this candle to close. She hasn't stated anything really important so far. The high of the day so far had been the 117.80. Just and chat caption euro dollar show. Okay, chat. No, I haven't done gold yet, Shiraz. No worries. Don't worry about it. I haven't done gold yet. Okay, we're watching euro dollar, and we're seeing that here, the fact that she's on her feet right now has caused a bit of a pressure on euro dollar. Where is the news feed? I had the news feed somewhere in front of me just now. Okay. Okay, we have the very first comments, which from what I see on euro dollar, a pressure in the euro dollar lower. Initial comment from Ms. Lagarde is that in the first quarter, the economy grew more than expected. Overall, a modest expansion. Higher tariffs in stronger euro are expected to make it harder for firms to invest. Strong labor market, rising real incomes, solid private sector balance sheets support consumption. Okay, so is she basically implies that higher tariffs, so if they don't agree to a deal, considering that we have a strong euro as well, it could make Europe less attractive for investors. So it could hit basically the economy. Can you correlate? Understand the correlation? We have a really strong euro overall, right? Remember the performance so far this year. We are at 4 years highs. So if they don't reach to a deal, that means that the tariffs are still on, the really high ones, 30% in 30% for industrial products. I don't remember how much was it per asset for Europe, but really, really high tariffs for Europe from US. So high tariffs in a strong euro, that means that the firms, the companies will be hit the most, because obviously their expenses will be way higher, right? Their consumption will be affected. Other foreign investors will not choose Europe to invest. Okay, so that could hit the European economy as well. So you understand that this is not something that the ECB members want. But have in mind that if something like that happens, so we need to wait until August 1st to check. But if indeed they don't reach to a deal, it means that ECB needs to proceed and cutting rates further, and not just once. What is she saying? She's saying that their target is still on a 2% inflation. A risk to growth remain to the downside, led by global trade tensions. So pretty much she's highlighting how uncertain the current situation is due to the trade tension. And we could see greater risk aversion just due to the financial market sentiment the uncertainty around the financial market sentiment. Okay. So, okay. She is really, she focused her the entire speech on tariffs. So everything will depend on the tariffs, guys. Or everything will depend on the tariffs. We have another 5 minutes to go until this candle close, but it definitely fell short of the trend line that I have put on. This is euro dollar 15 minutes chart, and it's keep pushing lower because of Miss Lagarde conference. Basically, she's really highlighting again and again how risky a higher tariffs could be if the European Union hasn't reached to a deal with hasn't reached to has hasn't doesn't manage to reach to a deal with the US. So yeah, so this looks a bit of a fear. That's why we are seeing euro dollar on the downside. So let me check questions as well. Yeah, definitely seeing some fear over here. And at the same time, by the way, guys, we have, I forgot to mention that the jobless claims from US, the weekly ones though, things haven't really changed much. So, okay, lower than expected initial jobless claims. Uh, Nothing really, not much, basically, not much. So a bit lower of what was expected. But the story of the day is the press conference. So yeah, okay. So yeah, nothing really new in the language, either of the on the language that she used, neither on her statement. Um, Everything that she's saying and she's stating right now was expected. That's why we said that it's all about the tariffs. It's all about the tariffs. Um, so it could be proven a non-event. Um, yeah, ECB just remains data dependent, meeting by meeting approach. Um, is not really committed to a particular rate cut. But what is like pressuring the euro dollar right now is here the fact that she's highlighting again that how much uncertainty is coming from the trade front. So, guys, 2 minutes to go until this candle close. As I said, big high energy bearish candles. MACD, it's negative. Stochastic keep extending lower. Parabolic SAR turn on the other side. That suggests that there is further room on the downside. And we have seen we are seeing basically right now, we are seeing another leg lower for euro dollar in the very short time frame. Immediate support other than 117 117 11 is also the 117.25 previous support level. Okay, so keep an eye on that as well. So let's jump into the gold as well. That's silver. That's interesting. Okay, we are seeing lower lows in silver, but let me just. Yeah, sure. I'm gonna check dollar yen as well. Just let's quickly do gold as well. Gold. Gold. Where's my gold? Here we go. Here we go. Let's start with the 15 minutes chart, guys. 15 minutes chart. We have a nice, decisive 15 minutes chart, Shiraz, for gold. Okay, 15 minutes chart. There is an ongoing pressure, as you can see from parabolic SAR. They remain at the top of the price. Moving average also above the price. I'm gonna change this a bit because it's so. Let me just try the simple one. The simple one. 9. Gonna try the 15 one. Okay. Okay, it's a bit smooth. That's a bit smooth. But it could. Yeah. 5 and 9 exponential. Sorry for that. Yeah. So decisive bearish candle momentum was negative. RSI struggles to move higher, so you can see that we're getting some lower highs over here from stochastic, indicating that there is further room on the downside for gold in the very short time frame, such as a 15 minutes chart. So I'm gonna zoom up to 1 hour chart just to find immediate support and resistance levels. I have some old ones that we have seen last week, and this is basically 3350, 3343 level, and 3337. Actually, over here it looks that we used to have a neckline over here. Can you see? 1, 2, 3, 4, 5, 6. It looks like a not a rounding top, neither a head and shoulders. Yeah. Nonetheless, it was a nice neckline for anyone that saw earlier yesterday, basically the 3380 level. It was a nice breakout level with the asset extending lower today. And let me check where we're standing right now. Ignore all this. Let me clear this mess. Sorry. Okay. So obviously a nice ceiling has been prevailed over here. It looks like an ascending triangle with a flat top. What it looks like, it is an ascending triangle with a flat top, guys. Okay, really important, really interesting ahead of the new week and for tomorrow as well, because a break below the channel, below the triangle, could lead to losses up to 200 points lower, etc., etc. I mean, it could be massive. For the time being, we are in the second day in a row to the downside. Momentum remains negative intraday, as I said. Quite decisive bodies, candles, I mean bearish candles. So in an ascending triangle with a flat top in a daily basis, so keep an eye on that. Put a note, okay, just to monitor any breakouts either on the upside, either on the downside. While intraday, as I already said, it seems that it's doing some lower lows and lower highs. Momentum is still negative. You can clearly see MACD. Stochastic fails to basically to extend higher. It's just posting some lower lows, lower highs, which are in line with the performance of the price. So, dear Shiraz, it seems that there is further room on the downside for gold over here intraday in the very short time frame. Let me also try my Heiken Ashi to see my Heiken Ashi setup to see what's going on. Yeah, consecutive bearish candles. No tail at the top in this one. So yeah, it seems that there is further room. Yes, further room on the downside. 33.50, a round number as well. So let me check. So the latest swing low after that, that will be the 33.45, 44 precisely. Yeah, you see, negative extending lower, stochastic the same. So bears are in control of of gold. Okay, there's no indication for a reversal. Something that could help you spot a reversal, okay, a rebound, it will be the stochastic in such a tight time frame. So let me just try and okay. My face is in the front, so you cannot really see it, but can you? No. No. It's vice versa. Should be. We'll put side by side. Oh my god. I'm trying to do. Okay. This is what I was trying to do. I was trying to show you that I have put a trend line on stochastics over here. Can you see? So lower high, lower high, lower high. So something that could help you identify a potential rebound, okay? Potential rebound will be a move, a break of the stochastic, a break of my trend line from the stochastics, basically, okay? So if the stochastic extends and breaks above my trend line, that could, in a combination with a consolidation or even some positive Heiken Ashi candles, so to coincide with the price action, this could indicate a bit of a correction or a bit of a reversal, but momentum is still negative, okay? So be careful of a possible short-lived reversal. So for the time being, bears are in control, and it seems that there is further room on the downside for gold in the very, very short time frame. The daily picture, as I showed earlier, we are in a ranging in an ascending triangle with a flat bottom, so a nice support level could be seen at 33.20 level. Okay, it could retest 33.25-20 level and hold or rebound above it. So let's wait and see. I'm gonna save this for next time. File, profiles, save. Right? Yeah, perfect. So what's next? Change the setup first of all. Chat. Dollar yen, of course. Okay. So that it was not justified, it was not proven, so out of the way. Perfect. So okay, guys, in general, okay, I'm starting from the daily chart, okay, and we can see that dollar yen, basically yen, okay, it has gained a lot of ground against dollar from the beginning of the year up to April. But since April, from April onwards, is more of a sideways, actually bouncing between 142 and 150. The latest performance that we've seen is basically the dollar has gained some ground against yen, but now yen is gaining ground against a really uncertain a certain dollar. Obviously, this was triggered by the trade deal as well, but in general, the dollar yen, it it seems that it will continue, at least from a technical perspective. It seems that it could stay longer in this range, in this 1 to nearly 3 months range. So the dollar yen, the US Japan trade deal helped a lot yen, as you can see, for a fourth day in a row. However, from a technical perspective, we have seen, okay, basically in the short term, so let's say, okay, so far this week, it has, yen is gaining, yen is the winner against US dollar, but it doesn't seem that it will halt. I mean, doesn't seem that this decline will continue. It already found some ground at 145.90 level, so it's more of in a consolidation mode. So yeah, don't forget that Bank of Japan maintains this ultra accommodative stance for the time being. So we don't have, let's say, the scenario of further rate hikes helping the yen. So it seems that this decline, so the dollar yen decline, is running out of steam. Okay. Yeah, MACD is still positive. Stochastic, okay, is negative, but yeah, it seems that the dollar yen ran out of steam. The dollar yen decline ran out of steam, so it's currently ready to rebound, but it's more neutral. Flatten moving averages. MACD is negative, but below the signal, above the signal line. Sorry. Stochastic. It is basically extending higher, so that means that we could see the asset retesting 147.20, 147.90. So keep an eye on these two levels ahead of the US session. Basically, we're just a breath away from the US session. So yeah, don't forget that the Bank of Japan maintains, as I said, an ultra accommodative stance, while in contrast, the Fed is expected to cut up to 46 points. Yeah. So currently, the markets are pricing a 20 points rate hike by year end from the Bank of Japan. Okay, but for the next meeting, which that's why we are focusing on the short-term time frame, right? On what's going on right now. For the next meeting, no change is expected from Bank of Japan, neither from the Fed. Okay, but the odds, the Fed is expected to be really aggressive, dovishly aggressive this year, with 46 points potential rate cut, while the Bank of Japan is expected to hike by maximum 20 points, but with lack of clarity on the timing that this will take place. So nonetheless, from a technical picture, so far today, intraday, in this very short time frame, we're seeing that the asset is rebounding away from 145.86, and there is further room on the upside. Next immediate resistance level 147.20, and if that level breaks, then we might see the asset retesting 147.93. Yeah, so yes. It also seems that it has broken. Let me just check something, guys. Wait. Standard deviation over here is not the appropriate one. Neither this one. let me put 0.75. Yeah, that's much better. Can you see that it looks that it crossed above the channel that is being held since last week? Yeah, so extended, consolidated at the top of the channel and extending higher. So 147.20, the next level to be closely monitor, the key resistance level that could be indicative for further shift on the upside for dollar yen. So guys, any questions, any further questions? The blue, oh, that's why I don't like the watermarks. I don't like the watermarks. Sorry, guys, all this was about dollar yen. Oh my God, that was all about dollar yen. Okay, that's why I don't like using them, because I forget to update them. There's a report stating Trump will visit Federal Reserve tomorrow. Yeah, I saw something earlier, but it wasn't confirmed. Let me check right now on the news feed whether there is anything like substantial or confirmed at least. Let me see. Mr. Trump, Fed. Okay, obviously the threat for firing or replacing Mr. Powell is still on. And yes, you are right. Thank you for sharing it with us. Thank you for sharing it, Zibusiso. Yes, indeed, it was confirmed. I can see it in The Guardian. Basically, that Mr. Trump will visit. Will visit the Fed, the chief of the Fed, Mr. Powell, tomorrow. Actually, on Thursday. That's supposed to be today, wasn't it? Yeah. This is basically a very unusual move. Okay, very, very unusual move. He will visit it today, if I'm not mistaken. Yes, he will visit him today. You know that he's like repeatedly attacked Mr. Powell. He even found his the next chief of Federal Reserve, and he deliberately attacking Mr. Powell because the Fed and the Mr. Powell refuse to cut interest rates right now. They don't feel that it is the appropriate time. This is against of what Mr. Trump believes, and that's why he attacks him all the time. Okay. Let's wait and see what could happen. Okay, the excuse for this visit is basically the renovation of the central bank, which cost actually 2.5 billions. That would be interesting. Yeah, and it's today, so we might see a sharp escalation between the two leaders. Yeah, because he keeps pressuring. He even has a pressure campaign against Mr. Powell. So let's wait and see. It's today, this afternoon. So possibly we're gonna find out more later today, because it's U.S. afternoon. So yeah, food for thought. Actually, we need to keep an eye on that one, on that front as well. And considering that Fed has clearly announced that in the next meeting they will keep rates unchanged, this could cause further pressure from Mr. Trump against Mr. Powell. So let me see if you have any further questions. Okay, very good question. The position, the impact is not clear, simply because we have Mr. Trump. And even though presidents don't usually use, let's say, social media in order to put some aggressive comments, some threats, some accusation, etc. Mr. Trump is not like that, right? He's not like a politician. Politician is more of a businessman, and he tends to use the public speech and the social media platforms to attack, to comment, to threat. So everything will depend on whether he will put out, he will state anything, he will announce something, he will say anything in an interview, or type in his Twitter, etc. Anything against Mr. Powell. Okay, so yeah, there is no clear impact from the visit as such, but it will be, the focus will be on whether he will say anything in his social media or in any TV show after his visit in the Fed. So, or during the visit, his visit on the Fed premises. So let's wait and see. Guys, any further questions before I call it a day? I think there is nothing really much. Okay, so euro dollar over here failed to extend lower. We have a pretty dodgy candle over here. Let me see. That's a bit weird. I haven't seen anything surprising from Miss Lagarde. By the way, okay. Okay, it's just indecision. That's just indecision. It doesn't mean anything for the time being. It's still outside, below the trend line. So let's wait and see. No one asked me about dollar Swiss, guys, and Swiss is an asset that has monopolized. I mean, is the biggest winner of the entire year, if I'm not mistaken. Yeah, of the entire year. And no one asked me about dollar Swiss, and if I'm not mistaken, we have seen it. Let me put the usual, the proper Japanese candlesticks. Okay, here we go. And the daily one, the daily one. Here we are. Okay, that's 200. That's my 50. 200 as well. Oops, my bad. Okay, 20. No. Perfect. Okay. So, as I was saying, the dollar Swiss has been the biggest winner so far this year, and it holds these gains. It has been basically back to 2011 lows. So yeah, definitely the winner of the year so far, it has been Swiss. Swiss against US dollar, Swiss. But intraday, we have seen a nice rebound so far today, nice rebound, and move up, and move actually outside the 2 days range, okay, ranging market. So we had a nice breakout over here. Maybe precise, it was, let me put some trend lines, it's much easier. So the ceiling was here, so we have a nice breakout, okay, with the asset closing above 179.45 level, currently correcting a bit lower, but this is basically is the very first sign that the asset could basically extend higher. So we have some bullish bias, okay? So yeah, we have a key resistance level though at 179.62, okay? Not only is the 100 moving average, but also is a previous support level converted into resistance level. So why I'm showing dollar Swiss right now in the 1 hour chart? Simply because this is dollar Swiss 1 hour chart. Hide dollar Swiss 1 hour chart, because because we have entered the US session, so it would be good for you to have a look and monitoring it basically. So we have basically the breakout over here of a 2 days consolidation, right? One signal. Second signal, the MACD is trying to extend to turn positive, even though the signal line is below, is negative still. RSI, actually, it's holding above 50, okay? So 50 is around here, exactly, perfect. Okay, so RSI holding above 50, a bit neutral, but holding above 50. MACD turned positive, but signal line is still negative. We have a breakout outside the so far range. We have an immediate resistance, a very important resistance level at 0.7963. And the next resistance level is at, let me put the 200 simple moving average as well, at 179.85. So why I'm stating all this? Simply because you need to keep an eye on dollar Swiss, because we're getting some possible bullish signals. So if the asset manage to hold above this range, okay, and I mean, if the bulls take the control, then we could see it reaching the 100 period moving average and the 200 period moving average. So that means 179.63, 179.84 level. This if and only if you see the asset holding gains, and you can use the 5 and 9 exponential moving average over here for confirmation. Currently they are flat, but as soon as we see them pointing higher, that could be a confirmation that bulls are in control in the short term, and that could reach these two levels. Okay, a failure to extend higher, then it could let's say keep the asset into this range between not 79.40 and 79.50 level. Okay, but it's at a very, very important level right now, because we have some higher lows in the daily chart. You see, higher lows. So we need to closely monitor whether the sentiment is changing. Okay, so let's wait and see. So if there's no further questions, I'm gonna call it a day for today, guys. I don't see anything new. We spoke about gold. We spoke about a pound, about dollar yen. Very, very here. It's very important, dollar yen. I mean, keep gaining ground. Okay, pound is on a correction mode into the downside, 135.33. Bearish, MACD is ready to turn negative. And we have seen that it broken the trend line. If you connect the, okay, let me just, here it is. We have seen a significant breakout today. So that means that the asset, it could return back to 135.15 level. Okay, so that's a negative pound dollar so far today. Cryptos, Bitcoin's consolidating, Ripple under pressure. And that's pretty much it. Euro dollar return. Okay, we have a nice swing higher for euro dollar. Return back into the channel, into the short-lived channel. Even though the momentum is mixed, so not quite sure about it. Yeah, it looks like this is a limited move. It's not the real direction of the asset in general. Yeah, momentum is lower, significantly lower, and we're getting some mixed signals, so that's not the real actual direction. So wait, be a bit patient with euro dollar, okay? Be patient until you have clarity, because currently this is very messy. So rally on prices, but MACD is negative. Stochastic is pointing higher, but yeah. That's a really big candle though, so it could help the asset returning, at least, I mean, reaching the breaching 118 level again. Wow, what sparkle? Okay, what actually was responsible for this boost? It was the fact that the US market opened. It wasn't Ms. Lagarde, it wasn't the ECB. It was mainly the volume coming from the US. Yes, that should be it. Okay, guys, I'm gonna call it a date. Be very careful. Trade what you see, not what you think. And we're gonna see you again next week. Thank you. Thank you. Bye bye. Take care. Bye.